UPS stock, ticker symbol UPS. This stock is down 7% on the year-to-date chart, and they just announced their quarterly results, which gave the stock price a small push. Looking at the recent earnings report, we see some mixed results, but more on that in a minute. People love UPS stock because of multiple reasons, and one of the main thing is the dividend. And I understand why, with dividend yield at 4.5%, which is a great number. And look at the dividend growth, 14 years of dividend increases at a pretty high rate recently. If we look at the past 5 years, we see that UPS was beaten by the S&P 500. And to be honest, this doesn't look any good. So could this be the perfect time to buy UPS stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does UPS do? As the world's largest parcel delivery company, UPS manages a massive fleet of more than 500 planes and 100,000 vehicles, along with many hundreds of sorting facilities, to deliver an average of about 22 million packages per day to residents and businesses across the globe. Looking at the results, we see that UPS reported a revenue of 21.7 billion, down 5.3% year over year. To me, this doesn't look any good, but in all fairness, UPS did give us this outlook in previous quarters, so it's not a big shock. Profit went down 31.5%, which is an insane drop, and operating margin went down 310 bps. EPS went down 35% because of that. For the full year of 2024, UPS expects to report a revenue of 92 to 94.5 billion. Operating margin is expected to be in a range of 10 to 10.6%, which is much higher versus the current margin. However, it is still lower versus last year. In the first quarter, we see that daily volume decreased 3.2% year over year in the US. But March is actually showing us some momentum, so that's the positive part here. The US segment is down 5% year over year in revenue, which is a big number. But operating margin is looking even worse, with a decrease of 400 bps. The international segment sees daily volume decreasing with almost 6% year over year, looking even worse than the US segment. Revenue went down 6.3%, but operating margin really did a good job with a decrease of only 170 bps, which is still a lot, don't get me wrong, but compared to the US segment, this is looking pretty decent. The third segment, supply chain, reported a revenue of 3.2 billion, down also 5% year over year, and operating margin went down only 60 bps. Cash from operations is looking pretty good to me, with almost 1 billion increase year over year. Free cash flow is also looking pretty good with 0.5 billion increase year over year. Last but not least, the 3-year financial target is also changing. UPS expects to deliver a revenue between 108 and 114 billion in 2026, which is looking really good. They also expect margin to increase again, which is also a good sign to me. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. UPS is a 127 billion market cap company. PE ratio is at 19, indicating they are around their fair valuation. Later in this video I will show you my 3 price targets for UPS stocks, so make sure to watch until the end. Revenue is at 91 billion, and in this graph we see that revenue went up in the long run. During lockdown periods, revenue really went up big time. Most recently, it is stabilizing after a period of decreases. Margins are decreasing most recently. To me, this doesn't look any good. However, in the earnings report, they expect margins to increase again in the coming years, which is a positive part here. EPS is pretty much the same story as the revenue and margins. It is growing pretty steady and consistent over a longer period of time, but most recently it is decreasing. Analysis expected EPS is going to grow at pretty high numbers from here, especially from 2025 on, where they expect 12 to 17% growth. For the revenue analysis, expect pretty steady numbers with 4 to 5% growth per year. To me, this does look pretty decent for such a big company. Return on assets is sitting at 9.5%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at roughly 40%, which is also a great number. But it is lower versus the 5-year average, which is not a good sign. But keep in mind, the 5-year average is impacted a lot by the lockdown periods. Current ratio is at 1.1, which is a great number. It is also pretty steady historically, so this looks good to me. Right now, UPS has 26 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. UPS has 6 billion in total cash, so they can't pay down a big chunk of their debt. To me, this doesn't look any good. So, it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, but not at a steady and consistent pace or anything. Shares outstanding are decreasing over a longer period of time. To me, this looks really good. When shares outstanding are decreasing, it increases your ownership in the company, it increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.5%, which is a great number. Annual payout is at $6.52 and payout ratio is at 74%. I prefer 50% or lower, so right now they have only 26% left in cash to buy back shares, pay down debt, do acquisitions and all other things. And now it gets really interesting. The 5-year growth rate is at 12%, which is a great number. And they have increased the dividends for 14 years in a row, which is really impressive. If you take a look at these numbers, the dividends paid since 2012, you see that UPS did increase the dividends at a decent pace historically. But 2022 is when they heavily increased the dividends. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that historically it looked really good. However, payout ratio is increasing big time over the years. To me, this is not a good sign. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase slowly from here. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare UPS stock with the overall market, in this case the S&P 500. Next to that I added FedEx. On the 5-year chart we see that UPS stock was beaten by the S&P 500 big time. In total UPS returned 50%. And keep in mind, this is including dividends. The S&P 500 is sitting at 87% return. Ironically, FedEx also had a 50% return. On the 1-year chart we see that things are changing drastically, with minus 22% return for UPS, while the S&P 500 is sitting at a 23% return. FedEx does a decent job with almost 19% return. On the 6-month chart, UPS is recovering a little bit, but it is still sitting at only 0.37%, while the S&P 500 is again the winner with almost 20% return. On the 1 month chart it is again UPS with a negative return, almost minus 5%. But both the S&P 500 and FedEx are also having a negative return. Bottom line, UPS was beaten by the S&P 500 in the long run and in the short run. So could this be the perfect time to buy UPS stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 8, 10 and 12%. For the free cash flow margin I'm putting in 6, 8 and 10. For the PE ratio I'm putting in 18, 20 and 22. For the price to free cash flow I'm putting in the same numbers. They have a mode in my opinion, but they are slow growing. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now UPS stock is at $148. I hit analyze and we see a few green numbers. We have a low price target of $79 to $105. We have a mid price target of $130 to $162 and we have a high price target of $200 to $240. To me, the mid price target is the most justified here, telling me that this stock is in the middle of this range. Which price target do you think is most justified? Let me know in the comments down below. My final conclusion on UPS is that the company is facing some tough times. Revenue and margins are decreasing and of course this is worrying a lot of people in the short run. If you look at their own expectations and analysts' expectations, we see that the company will recover by 2026. And of course we don't need to follow them blindly, but I think this is more of a rough guidance. I expect that the company will recover, but they will be a slow growing company, so it might take some time. Most fundamentals look pretty good and especially from a dividend point of view I really get excited. From a value point of view things don't look that bad, but we take into account that the company is recovering in the coming years, so I wouldn't mind to have a bigger margin of safety here. For now I keep UPS on my watch list. For me it is not the right time and I just said I would love to see a bigger margin of safety for now. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.